Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebook LM AI, this series brings you clear, meaningful insights into finance and beyond.
Welcome to episode 50, where we unpack how AI companies are showing unprecedented acceleration in revenue growth and global expansion, significantly outpacing earlier tech innovation waves like SaaS. This rapid progress is driven by their ability to hit revenue milestones faster, achieve immediate global reach, and leverage innovative business models. Let's break it down.
Artificial intelligence, it's everywhere, right? You hear the buzz constantly.
All the time.
Usually it's about, the potential or maybe just headlines from a few massive companies.
Right, the big names.
But what if the real economic story isn't just potential? What if it's happening, right now?
And maybe faster than people realize.
Exactly, faster and wider. So today, we're doing a deep dive into what we're calling the AI economy. And we're not guessing here.
No, this is grounded.
We've got actual real-world transaction data. It kind of pulls back the curtain on how fast these AI companies are growing revenue, and maybe even more surprisingly, how global they are from the get-go.
And the source for this deep dive is pretty unique. We're looking at Stripe's latest analysis.
Right.
They handle payments for, I think it's a staggering 78% of the Forbes AI 50 list. OpenAI, Anthropic, Midjourney, Cohere.
Wow, okay, so they see the money flowing.
They really do. This isn't just theory. It's based on payment data from their top 100 AI companies. Hard numbers.
Perfect. So with that kind of view, our mission today is, let's cut through the noise. Let's figure out what this data really tells us about, say, 3 key trends that are shaking things up. Not just in tech, but kind of everywhere.
Sounds good. Where should we start?
Okay, let's unpack this. The first thing that really honestly jumped out at me, and I think it'll surprise you listening to, is just the speed. The sheer, unprecedented speed of AI growth.
Oh, absolutely. It's blazing fast.
These startups, they're hitting major revenue milestones way faster than we've ever seen before, right? It just redefines fast growth.
It really does. I mean, you compare them to the fastest growing SaaS companies out there historically.
Yeah.
AI companies hit $1 million in annualized revenue, a median of 4 months faster. So 11 and a half months for AI versus 15 for SaaS.
Okay, 4 months faster to the first million.
But then it gets even more dramatic. The gap widens. For $5 million annualized revenue, AI companies reach that a full 13 months faster.
13 months, wow.
Yeah, 24 months for AI versus 37 for SaaS. And what's maybe even wilder is the acceleration we're seeing with the newer AI companies. Those founded between, say, 2020 and 2023. They're hitting these milestones about 3 times faster than the AI companies founded before 2020.
3 times faster. Give me an example.
Okay, so getting to $1 million ARR. For the newer cohort, it's taking just 5 months on average, compared to 16 months for the older AI group.
5 months versus 16, that's incredible acceleration.
It really is. And the why behind this, it seems pretty clear. It's just surging demand. We saw worldwide company AI usage jump from, 55% in 2023 to 72% in 2024? And generative AI usage, that more than doubled.
People are actually using it.
Massively.
Yeah.
And, put it in historical context, U.S. individual AI adoption rates are roughly double the adoption rates of PCs and the internet at similar points in their history.
Double the internet adoption rate. That's genuinely astonishing.
It puts things in perspective, doesn't it?
It really does. Those numbers are kind of mind-boggling. But let's make it concrete.
Sure.
Can we talk about some specific companies?
Sure.
Like Harvey, the AI legal assistant. They quadrupled their revenue just in 2024.
Quadrupled.
Or Bolt. They help you build web and mobile apps, hit $20 million ARR in 2 months.
2 months. It's hard to even process that speed.
I know. And Lovable, a no-code builder. $17 million ARR in 3 months.
And
Cursor, the AI coding assistant, over $100 million ARR in just 3 years.
wow.
So for you listening, maybe you're an entrepreneur, maybe you're in a small business, what this really shows is that building software, turning an idea into a real application that makes money, that barrier is dropping like a stone.
Absolutely. It democratizes development in a way.
It completely changes who can build the next big thing, right?
And think about the knock-on effects. What's fascinating here is this rapid monetization. It fuels this powerful cycle.
How so?
Well, you get investment because the returns are so fast. That investment fuels more innovation, which allows faster global expansion, which attracts more investment. It's this virtuous cycle spinning incredibly fast.
A feedback loop, unlike anything we've seen.
Pretty much.
Okay, so we've got this incredible speed, but it's not just how fast, it's also where they're scaling, isn't it? Which brings us to the second big insight. AI companies are basically born global. They're just skipping the old playbook.
Yeah, the traditional start local, then expand model. It seems many AI companies are just bypassing that entirely.
So the data shows this.
Oh yeah, the data's pretty compelling here. Stripe's top 100 AI companies, they sold into roughly twice as many countries as SaaS companies did in their very first year.
Twice as many. What are the numbers?
It was 55 countries for AI versus 25 for SaaS in year one.
Okay.
And that pattern holds up. By year 4, AI companies were selling into 104 countries, compared to just 57 for SaaS, still almost double the reach.
So they maintain that global footprint right from the start.
Exactly, which, raises a really interesting question. Why are AI buyers popping up seemingly everywhere instantly, not just in the usual big tech hubs?
Right, you'd expect maybe Silicon Valley, London, Berlin.
But we're seeing significant adoption, especially on a per capita basis, in smaller countries, too. Places like Iceland, Estonia, Luxembourg, Switzerland, Singapore, they're becoming AI hotspots.
Huh. So the demand is just everywhere.
It appears so. The desire for these tools seems incredibly widespread, regardless of traditional geographic tech concentration.
That's fascinating. Is there a standout example of this global reach?
Well, think about Midjourney, the AI image generator.
Okay.
In 2024 alone, they sold their services to users in over 200 countries and territories.
200, that's basically the whole world.
Pretty much. It's a massive testament to that truly global, almost borderless demand for AI.
And just think, for anyone listening, think about how that immediate global market changes everything. Your strategy, your competition. It's a whole different ballgame from day one.
Absolutely. The playbook is being rewritten in real time.
Okay, so speed and global reach from the start. Let's pivot now to the third key trend, which is maybe more about the how.
Yeah.
The rapid emergence of really innovative business models, how these companies actually make money.
Right, because it's not always just the standard subscription model we're used to.
So what does the current landscape look like?
Well, right now, most of the top 100 AI companies on Stripe, maybe around 80%, they do initially offer broader sort of horizontal tools.
Like what?
Things like content generation that actually makes up about 75% of the initial offerings, which is huge.
Wow.
Or, general chatbots or the underlying AI infrastructure itself, kind of foundational stuff.
Okay, broad tools first. But here's where it gets really interesting, right? There seems to be this clear shift happening.
A definite move towards highly specialized, industry-specific, or vertical solutions.
And these aren't just like simple wrappers around a big language model.
No, not at all. These are purpose-built tools. They're designed to integrate deeply into specific industry workflows and solve very particular problems.
Can you give some examples?
Sure. So in healthcare, you're seeing companies like Abridge, Nabla, DeepScribe, focusing on things like clinical documentation.
Okay.
Then you've got Studio, specifically for real estate marketing, SketchPro for architecture, Slang.ai handles restaurant phone reservations. Host AI is for property management.
So very targeted, solving one industry's pain point really well.
Exactly. Deep integration, specific value proposition.
And it's not just what they're selling, but how they're charging for it that's changing too, right? Beyond just simple subscriptions.
That's a key part of it. New payment models are popping up that really match how AI is actually used.
Like what?
Well, first, there's a big move towards usage-based billing.
Pay as you go, basically.
Sort of. You pay based on consumption, maybe compute time, or data processed, or the number of API calls you make. It aligns the price directly with the value or the cost incurred, and it makes it much easier for customers to start using the service because the initial commitment is lower.
Makes sense.
Yep.
Any examples there?
Yeah, Hex, they do complex data analysis. They processed over 500 million usage-based billing events last year alone. Just shows the scale as demand for compute power surges.
500 million billing events. Wow. Okay, so usage-based. What else?
Then there's the rise of outcome-based pricing.
So you pay for results.
Exactly. Payment is directly tied to the results the AI achieves. This really lowers the risk for the customer. And it's particularly suited for these emerging agentic workflows we're starting starting to see, where AI takes actions autonomously.
Interesting. But don't these flexible models, like usage or outcome-based, create uncertainty for the AI company? Subscriptions are predictable.
That's definitely a challenge. Revenue forecasting can be trickier.
So how are they managing that?
A really common solution emerging is the prepaid credit model. Customers buy credits up front.
Ah, okay, like a prepaid phone plan.
Exactly. It helps the AI startups manage their cash flow, gives them more predictable revenue chunks, and it gives customers control over their spending. Plus, it can reduce fraud risk in self-serve signups.
So kind of a win-win.
It seems to be working well for many.
And all this innovation in how value is exchanged, it leads us to something really on the cutting edge, doesn't it? This idea of agentic commerce.
Yes. This is where it gets potentially transformative.
Explain that. What is agentic commerce?
It's basically AI agents starting to take on roles that humans traditionally handled in commerce. Like researching product options, actually making purchases, managing subscriptions, negotiating, all autonomously. The AI acts as an economic agent on behalf of a user or a business.
So the AI is becoming the customer, almost, or the procurement department.
In a way, yes. Or the customer service agent. Think about 11 Labs. They're already using AI agents to handle subscription management and even process refunds, all through voice automation. Or companies like Perplexity and Payment are building ways for AI agents to make payments seamlessly as part of their workflows.
Right. So if you connect this to the bigger picture, this isn't just a new feature, is it?
No, it feels much more fundamental. It could really change how businesses interact, how they transact, maybe even how markets function.
Is this just theory, or are businesses actually preparing for this?
The preparation is definitely starting. Recent surveys show 53% of global business leaders say they are actively preparing for agentic commerce.
Over half.
And 63% rate its importance as a 7 out of 10 or higher within the next 2 years. So high importance, near-term horizon.
Wow.
And you see it in the tools being adopted too. Things like the Stripe Agent Toolkit being downloaded thousands of times per week. And hundreds of startups focused specifically on AI agents launched on Stripe just last year, with huge growth expected in 2025.
Thousands a week. Hundreds of startups. This isn't niche. It feels like a genuine movement taking shape.
It really does.
So what does this all mean? Taking all three trends together, it feels like a complete reimagining of the digital economy.
I think that's a fair way to put it.
Okay, so let's quickly recap what we've really dug into today based on that Stripe data. 3 big things stood out. First, that incredible, almost unbelievable speed AI companies are hitting revenue milestones.
Way faster than SaaS benchmarks.
Second, they're born global, expanding worldwide practically from day one, skipping the old local first playbook.
A much wider, faster international reach.
And third, this rapid evolution in business models, moving from broad tools to vertical solutions and adopting usage-based, outcome-based, and prepaid models, all culminating in this rise of agentic commerce.
Right, where AI itself becomes an active participant in transactions.
So putting it all together, this cycle of fast investment, rapid innovation, immediate global expansion, new transaction models, it's not just about cool new tech, is it?
No, it's much bigger than that. It's fundamentally reshaping how entire industries operate, how value is created and exchanged globally. It feels like a genuine paradigm shift.
And for you listening, hopefully understanding these trends gives you a bit of a shortcut, a way to be really well informed about one of the most dynamic shifts happening anywhere in the economy right now.
Yeah, whether you're prepping for a meeting or just trying to make sense of all the AI headlines.
Hopefully some aha moments in there that give you a fresh perspective.
Definitely. And maybe here's something to really chew on after this.
Okay, leave us with a thought.
Consider how these shifts, the vertical AI becoming common, agentic commerce taking hold, how might they reshape industries that aren't tech? Think about manufacturing, retail, finance, healthcare.
When AI isn't just a tool in the business, but a partner doing business.
Exactly. What new roles emerge when AI agents handle purchasing or customer service? How do companies need to change their core operations, their strategies, when their partners or even their customers might be AI? That's the next wave to watch.